Good afternoon and welcome to NYFP. As the month of June and the second quarter draws to a close, we are seeing the U.S. stock averages recover from earlier session losses. Now joining me this afternoon is Peter Cardillo of Rockwell Global Capital. Peter, good afternoon and happy Friday.
Thank you. Good to be back.
Well, we continue to see volatility. At the open, the Dow was off by over 100 points, and now we are seeing the equity averages recover from earlier weakness. We got mixed economic data releases, some Fed speeches, but it is also the month end, and we get the Russell rebalancing. So what do you make of today's action?
I think it's a combination of two factors. One, last-minute window dressing, and as you indicated, the rebalancing of the indices, and also Fed lacquer, basically was in somewhat contradiction to some of the recent data from some of the recent chatter that we got from other Fed speakers. And so, he basically said that perhaps September could be the month when the Federal Reserve might begin pulling back on the stimulants. And that, I think, is the reason why we saw an upward movement in rates this morning. In the last day of the quarter, you generally have a little bit more volatility than usual, and I kind of suspect that that's probably the reason why we saw this, early morning weakness.
And Peter, we're here at the end of the week as well as the end of the quarter. Earlier this week, we got that U.S. First quarter GDP reading, the final revision to that reading. And it did come in weaker than expected, but we got a little bit of that bad news is good news in terms of the market action. And going forward into next week, we get the U.S. jobs report at the end of the week, but we have to keep in mind that it's 4th of July. Now, given that we have that jobs report, global PMI, and central bank rate decisions, what do you expect to see next week?
Well, to begin with, I think we're going to see a very modest climb in terms of jobs creation. I'm looking for 168,000 new jobs, which is going to be basically consistent with what we've been getting all along. Not too hot, not too cold, but certainly not enough to motivate the Feds in trimming sooner than anticipated. And then, of course, in terms of the unemployment rate, we might get a slight downward tick of about 0.1%, and that's probably going to be due to the fact that we're seeing a lot of people leaving the workforce, and of course the creation in new jobs is probably going to be more centered on the fact that temporary workers, temporary work jobs are going to take a tilt towards the upside as some of the students receive temporary work for the summer.
And Peter, last but not least, do you expect any change out from any of the central banks next week?
No, I don't. I think if they stay on hold, I think that we'll probably going to get more comments out of Feds that are going to suggest that the theme data dependent remains in place. So data dependent, economic dependence is what's really going to motivate the Fed.
Well, I think those are key terms to keep in mind as we listen to more Fed speeches. Thank you so much for joining me at the end of the week, and have a great weekend.
My pleasure.